Stack the Shields Warband. The tape moved overnight, Friday, June 5th, 2026. Crypto bled for a fifth straight day. The largest Bitcoin bull on earth told you exactly why, out loud, with a number, and in 3 hours, one data release will set the tone for every asset you hold. There is signal in all of it. Listen, as of 6 Eastern this morning, Bitcoin trades at 62,400, down about 2% on the day, off better than 13% across the week, and trading near half its record high. Ethereum sits at 1,660, off better than 6%. Solana at $65, down more than 5. 5 days of red, and the structural driver has a name. The spot Bitcoin funds have now bled for 13 straight sessions. Better than $4 billion walked out the door, the longest outflow streak since those funds were born in early 2024. And mark this, because it cuts against the week's loudest headline. Citi did the arithmetic. Roughly 45% of Bitcoin's weekly move traces to those fund flows, not to anything Michael Saylor's company did. The exchange-traded fund desk is driving this tape, not a 32-coin sale. The signal engine read the rotation underneath it in real time. At yesterday's 4 o'clock close, the InvestAnswers Decision Support System threw a confluence buy on Alphabet, the engine pointing capital into the hyperscaler that just raised $80 billion to fund its own build-out. And by 8 that evening, it had flipped optimized trend bearish on Broadcom, the custom silicon name the crowd had front-run into Wednesday's blowout, out of the crowded chip into the hyperscaler, and on a Bitcoin treasury proxy, Metaplanet, Asia's answer to strategy, the engine threw mean reversion oversold just after the afternoon bell, the selling pulled to a near-term limit. But the number that matters most has not printed yet. In 3 hours, at 8:30 Eastern, the May jobs report hits the wire. Private payrolls already ran hot on Wednesday, 122,000, beating the street. The official tally is expected far softer, near 90,000, unemployment holding at 4.3. Here is the trap. A hot number does not help you. With the Federal Reserve near certain to hold in 2 weeks, and the first cut now shoved out into 2027, a strong print pushes bond yields higher, and the most liquidity-sensitive asset on the board feels that first and feels it hardest. Watch the 10-year yield at 8:30. That is the tell for the day. Now to the story that frames everything else. Yesterday, Michael Saylor stopped defending and started explaining. His read on the bleed, posted plainly, roughly $400 billion has rotated into artificial intelligence infrastructure over the past 6 months, while the Bitcoin funds shed about $4 billion. Not impairment, he said, rotation. The fundamentals are intact. The capital simply went hunting elsewhere. Hold that against 3 other lenses, because they all point at the same thing. Jordi Visser, citing Morgan Stanley's tally, flags that north of 90% of every long-short fund's return this year came from just 3 sectors: semiconductors, hardware, and power. Our own engine just printed it live. Confluence buy on the hyperscaler, trend sell on the crowded chip. And in crypto itself, while Bitcoin bled, artificial intelligence-linked tokens posted double-digit gains in the same window. This is no broad altcoin season. Dominance still sits near 60%. The gauge nowhere close to confirming. It is a narrow, surgical reach for the one narrative, and everything else got sold to pay for it. So read the regime clearly. Capital is crowding into the abundance trade, the compute, the power, the silicon, and selling the scarce thing to fund it. The merchants debase, the warriors stack. Here is the second-order truth the rotation chasers forget. The artificial intelligence build-out runs on power and copper and grid that no central banker can print, and the hardest, most fixed supply money on earth is the cleanest claim on that very scarcity. The flows are one-directional today. They will not stay that way. When the abundance trade digests its own capital spending, and it always does, the asset sold cheapest into the rotation is the one with 21 million units and no committee to vote more into being. I will not dress up the tape though. On Tuesday I told you the whales were buying the dip. This week they stepped back. The large wallets trimmed into the slide rather than adding. That is what a bottom in progress looks like. Not a bounce you chase, a level you accumulate. Which brings us to the bell the bears are ringing this morning, and why the Warband must hear it rung correctly. The doom note making the rounds, Strategy's variable rate preferred, the one they call stretch, slipped below its $100 par value, and therefore, the story goes, the whole Bitcoin buying machine seizes up. Read the machinery, not the headline. That preferred is a par defense instrument. When it drifts a few points under 100, that is not a breach. It is mechanically normal. Below par, its yield simply sits above its coupon by design. The lever that defends par is the dividend rate, reset monthly in quarter-point steps. And that coupon has held flat at 11.5% for 4 straight months. The lever has not been yanked. The machine is not seizing. Here is what actually matters. Stripped of drama, the preferred stack self-funds for as long as Bitcoin appreciates more than about 3% a year. A hurdle its long-run trend dwarfs. So the coupon level is second order. The binding variable is the Bitcoin price itself, now trading below Saylor's roughly $76,000 cost basis, and the company's cash reserve, thinned to about 6 months of dividend coverage. Those two are the gauges. Amber, worth watching, not flashing red. The genuine doom loop the bears describe needs the coupon climbing across several resets while the reserve drains and Bitcoin sits below basis, all at once. Right now, the coupon is flat. The spiral is not engaged, and the 32 coins they all screamed about, 0.004% of an 840,000 coin hoard, sold at a profit. Tom Lee called it classic bottom behavior. He is right. Now lift your eyes off the tape, because the Musk flywheel turned hard while the market stared at yields. The payments leg finally went live. X money rolled out broadly this week, past the closed beta at last. 6% yield on insured deposits, a metal debit card, 3% cash back, and no crypto at launch. There is the tell. The Everything app's money rail opens wrapped in a bank partner and federal deposit insurance. The yield paid in a unit that loses value while you hold it. A slicker skin on the same old plumbing, but a real distribution rail now, one that could carry harder money later. The brain kept shipping too. Tesla pushed full self-driving 14.3.3 across the fleet. A rewritten compiler the company claims cuts reaction time by a fifth, and a new in-cabin counter tracking how far you roll with no intervention at all. But the body lacks the brain. That driverless robo-taxi map that exploded across the whole Austin metro last week. Tesla has not disclosed how many cars are actually carrying riders, but Bloomberg, citing Texas state records, counts just 42 vehicles registered for the program as of late May. The software scaled overnight. The metal did not. The constraint is bodies on the road, not intelligence in the stack. The lesson the whole build-out keeps teaching. And the largest offering in market history is live. The SpaceX book opened yesterday, pricing June 11th, first trade June 12th under the ticker SPCX. Orbit, money, mind and body. One flywheel, and the only thing slowing any of it is how fast the iron can be built. Here is the frame for the day, Warband. The capital rotated into the abundance trade and sold the scarce one to pay for it. And the largest Bitcoin holder on earth named that flow out loud. The doom bell ringing over strategies preferred is mostly noise. Watch the Bitcoin price and the reserve, not the par tick. The Musk machine turned every spoke but the build, and in 3 hours, the jobs number sets the tape. A hot print lifts yields and presses us harder, so do not chase the candle before the engine confirms the turn. The weak hands sell the rotation. The disciplined accumulate the scarcity it leaves behind. I am Ragnar, the HODLBARBARIan. This is Warband as a service, Viking intelligence delivered in real time. Until tomorrow, hold the long horizon.